Hi there, welcome to Kneppy Invest. Time for a portfolio and technical update. So I'll be looking at the performance of three of my portfolios and also be looking at some interesting charts of companies within my portfolio. So I am being a little bit biased today in terms of technical analysis, but at this point in time, I've only gone through charts of those companies I do own. So that's the process I have every single Saturday. I start going through charts of companies I own, and then eventually I'll look at charts of companies that I don't own. But I'm falling a little bit behind today, and I decided to record this video at 11 a.m. because I have to record another video later today so I can release that video on Monday because I'm working on Sunday and Monday, 12-hour shifts, so I have zero time to record any videos when I do actually work. So a little bit biased in terms of technical analysis today, but there is some interesting charts of companies that I do own in my portfolio. Now onto the performance of my three portfolios. I have done a little bit of tinkering in naming these portfolios, and I have come up with what I like. So I have named my portfolios long-term, medium-term, and short-term. Long-term is generally high-quality companies, and to be honest with you, these high-quality companies, more than likely, I don't look at the charts of these companies all that often. Now, I have looked at some of the charts of these companies just to see what they're doing, but typically I won't care if the share price of these companies are in uptrends, downtrends, simply because I want to hold these companies for as long as possible. At this point in time, the long-term portfolio is up 3.27% compared to the benchmark, which is only up 2%. The other thing I have to take into account here is currency gain, because I have quite a few holdings that are overseas, not only in America, but also in Germany. So currency gain is very important. And there is a pretty big currency gain right now in this portfolio, up 0.91%. Now, if I actually took out my overseas holdings, my Australian holdings would have been performing quite admirably, because if I do look at my overseas holdings, they actually are down a fair bit in terms of capital gains, down about $1.7 thousand, or which is a fair bit, when overall this portfolio is up almost $3,000. So at this point in time, the main thing I'm looking for here is outperformance compared to the benchmark, and that's exactly what I am saying. And I should be getting outperformance because I don't include any low quality companies in my portfolio. So there's no banks, there's no BHP, no mining companies, no Woolworths, Telstra, those sort of companies that more than likely in the next 5 to 10 years, you won't see much change in the share price. So I am looking at capital gains here. And if I do get a little bit of dividends, that's an added bonus. But I want capital gains because you get outperformance versus the market when you are talking about growth companies. You don't get outperformance when you're just picking low quality companies that are dividend paying. And that has been proven time and time again by research. Anyway, so long term, doing really well at this point in time, but not quite as well as my other two portfolios. So let's have a look at the medium term. Now, so I've changed this from trading, calling it trading, to medium term. And the reason behind that is when I look at the charts for these companies, it's mostly daily charts. And I don't care about short-term movements in the share prices of these companies, because what I am wanting here in these companies is eventually I will be able to transfer these companies from medium term to long term. So I'm waiting and hoping some of these companies can transition to a high quality company. Best performing companies at this point in time in this portfolio, Duratec. I've been holding this company for maybe about a year now, and it is probably a 3 or 4 bagger right now, up a fair bit. And all of these performances are from the 1st of July, not from when I bought into these companies. And Serata coming in second, Doug third, we have Kogan, which has performed really well, Energy One, SG Fleet, which is more of a trading, but that company has performed really well. In fact, we will have a look at the what do you call it, the chart for that company. Nero, Johns Lyng Group, which is a company which I think I could transfer that to my high quality company. That is one company that I think is on that transition. Well, has a potential to transition anyway. Also has EZZ Life Science, IPG or APD Group. And we go, so a lot of holdings in this portfolio. So some people have said to me, why do you hold so many companies? You should only hold 20 companies. That's absolute rubbish, because the whole reason they say you should only hold 20 companies is when you're talking about the big cap companies. You're talking about you should only hold like CBA and BHP, because if you hold too many companies, you're just going to get market returns. The majority of these companies that I have in this portfolio are really small, and more than likely they are going to outperform the market over the long term if they can continue to grow, if they can transition to a high quality company. That's where you make maximum returns, by holding a company that transitions from low quality to high quality over time. And hopefully some of these companies will do that. So I'm much less likely to sell these companies out of the portfolio, more likely to hold these companies. The majority of the companies in this portfolio, the other thing I should say, are not story stocks. These are genuine companies with revenue. Many of these companies are profitable. So that is what I'm looking at. And the performance of this portfolio is doing really well at this point in time, up 5.4%. No currency gain, so there's no overseas companies in this portfolio. And yeah, capital gain really good, $8,100, and almost triple the benchmark. So really happy with the performance of this portfolio right now. Some companies are doing really well. Some companies not doing really well. And even those companies not doing really well, I'm fairly confident about the future of those companies. Now onto the third of my portfolios, and it is the short term. This is more of my trading portfolio, and this has been doing really well so far. Way more active in this portfolio, maybe a little bit too active at times, up 7.9% compared to benchmark 2%, and has been as high as 12% in the past. And I have done a little bit of trading in the past week, particularly on the Friday. I bought a few companies. I bought Satire, City Chic. I bought ResMed a few days ago. So what I've done with ResMed, I bought a long-term holding, and then I've just bought a trading holding in ResMed because I think there is potential. We might see a nice little bounce. And I want to take advantage of the bounce. Doesn't mean it would happen. Also took a position in the Star Entertainment Group, which I'm less confident about that at this point in time. Also sold out of Downer, and I also took some profits with Kogan. But overall, really happy with this portfolio, up 7.9. There's a few holdings here, Integrated Research, Breville, that have done nothing. Even A2 Milk, I'm not sure why I'm still holding that company in this portfolio. Also took a position in James Hardie as well. Anyway, and at this point in time, the best performing company is one company which I have taken profits, Nuix, share price $1.43, which is funny enough, I sold at $1.43, and share price right now is $1.43. I was thinking of actually buying back in Nuix, but let's have a look at the chart. I think the share price might have bounced. Yeah, nice little bounce on the Friday. Beautiful little bounce off $1.31. So I should have maybe taken a position in Nuix because I was waiting for that bounce. I just missed it, particularly in that first hour of trading on a Friday. Anyway, so it doesn't matter that I missed that, because there's always opportunities when you are talking about short-term trading. And what I'm finding with companies in this portfolio, a lot of volatility. Electro-optics has been very volatile over the past week. Even saw a little bit of volatility in Kogan. Mesoblast, fortunately, I was not holding Mesoblast when the share price dropped like 60% in one day. Still holding to Megaport. Share price still going up. I think it's been going sideways, but at this point in time, very happy with this portfolio performance. Yeah, so 7.9%, triple or quadruple the benchmark performance. Now onto charts. Interesting charts. So what I'm going to do is I'm going to start with the broader markets. So one of the reasons why I'm happy with the return of my portfolio is generally the Australian markets are going sideways. There's no trend at all. And there's been no trend for a long time. We're talking about almost 1 year. Now, it's really funny. I have heard a lot of experts say how good the overall market has performed over the past year. The reason it seems like it's performed really well over the past year is because when you start at the start of financial year 2022, that was almost at the bottom. So if you look at the performance of the Australian market over the past, say, 10 months, it's just been going sideways. It's just that 1st of July 2022 was the bottom of the market, or near the bottom. So just because the numbers say the market has done really well over the past year doesn't necessarily mean it's a good market right now, because that if you go even back further, a little bit further than that, go to the start of 2022, the ASX has just gone sideways. There's no trend at all. So I just ignore those people who say the market's up 15% over the past year or something. It's sort of, oh, what's the word? What's a good word? It's a, I was going to say, yeah, I can't think of the word right now. That sometimes happens to me. I can't think of the word. Deceptive. That's probably the word I was looking for. It can be deceptive to say the market is up 15% from the beginning of financial year last year. It's all about picking points in time. So you can actually prove anything if you pick the right point. So anyway, I think I'm rambling now. NASDAQ. Now, unlike the Australian markets, the NASDAQ is in an uptrend, still an uptrend, has been struggling. Oh, why is this taking ages? Still in an uptrend, a beautiful uptrend. It did pull through a resistance level about a month ago, has pulled back now and is right below that resistance level, has moved into support range at around about 15,000. So if it falls below 15,000, that would be a little bit bearish for the NASDAQ, down 0.67%. So short-term contraction in the NASDAQ, but that's nothing to be concerned about right now. It's still in a beautiful uptrend. Now onto a few companies that I do have in my portfolio that I just want to show you some beautiful charts or some really interesting action on the last trading day of the week. And the first two companies, Clinuvel and Select Harvest, we saw a really interesting bounce. So Clinuvel up 9.5% on the day. And if you look at the daily chart, so all these companies, I'll be showing you the daily chart. In my short-term portfolio, I typically look at 1 hourly charts. But these companies, which I own in my short or medium or long-term, I usually look at either daily or even weekly charts. Now, Clinuvel really doing nothing much. You could even suggest or argue share price has been drifting downwards. And on the last trading day of the week, up 9.5%. Pretty good volume. Let's have a look at the volume. Okay, volume as well. No reason to suggest why. No announcement from the company. So what could have caused this bounce in the share price? More than likely was someone gave out a favorable report about the company, and maybe like a fund manager or something put out a buy price of $22 for this company. And for some reason, investors love when fund managers do that. Or what do you call them? Trading, I don't know what you call them. Recommending sites put out reports about companies, buy, sells, and that sort of thing. And a lot of investors just jump on that. I think investors have to make their own mind up. Don't rely on those experts. Anyway, that's what could have caused Clinuvel to have a nice little bounce. And this is a long-term hold for me. No reason to sell this company. And I think this company will keep on growing and growing and growing for who knows how long. Select Harvests. This is a medium-term trade for me. This is reliant on almond prices going up. And I do think we're at the bottom of the cycle when it comes to almonds and also Select Harvest share price. It does look like the floor in the share price for this company is about $3.80. And for some reason, again, the share price of Select Harvest rose 11% on Friday. Probably pretty good volume as well. Let's have a look. Pretty nice volume. Again, I don't know what caused this bounce. Maybe something happened in the almond world. I have no idea. If you look at the weekly chart, you can see why I took a shorter term position. Share price down towards the lows you usually see for this company in the downward cycle. So even if we go back longer than this, you have to go all the way back to something like 2012-13 to see the last time share prices were this low. And if we do see almond prices starting to increase and the harvest for Select Harvest actually improving, they had a down year, maybe a couple of down years because of abnormal weather conditions in Australia, too much rain, too cool, that sort of thing. Looks like we're heading into an El Nino, which means warmer conditions, dry conditions, which is really good for Select Harvest and their almond production. And so the only thing we'll be relying on now is bad conditions in California. So if California have bad almond growing conditions, Select Harvest might be in the right position to see the share price get back up to, say, $9 or even $10. So possible, just a possible, doubling the share price from here. So a medium-term trade just based off what I think could happen with almond industry. Now onto another company. I was actually thinking of selling this, Chrysos Corporation. Not looking at the weekly chart, just a daily chart for this. This is a really beautiful looking chart for Chrysos Corporation. I've done a video on this company, so have a look out for that video if you don't know what this company does. I'll tell you, this is all about assaying, and they're using new technology for assaying, and this could be the standard in the future. And that is my thesis behind this company, is they will have the new standard in assaying. I'm thinking about 5 to 10 years from now, and maybe the market is thinking that as well, because share price is really booming higher. Looks like they will be profitable the next year, and the market cap of this company is 500 million. So the market really believes this story. Although when I say this story, this company is still producing revenue, and the revenue growth is pretty impressive for this company. Nice share price action the last 2 trading days. Again, not sure what caused that. Share price up 7.5% on the Thursday and a further 3.6% on the Friday. Again, this could be just a favorable report from who knows from where, or maybe the company did a presentation. I just have no idea. But the main thing is, chart looks absolutely beautiful. I was possibly thinking of selling or taking profits in this company. The main reason I actually did take a position in Chrysos was because of the chart, beautiful looking chart. But as I delved deeper into the company, I was thinking this is more of a medium or even hopefully a longer term play. And that would have been a mistake taking profits, because I would have taken profits at about $4.70, $4.80, and the share price has increased by over 10% from there. So nice, beautiful looking chart from Chrysos. Anyway, Electro-Optics. So I have been trading this in my short-term portfolio. In fact, I've made quite a few trades in this. I did make a mistake. I did sell at $1.02, but then I bought back in at $1.01. So, I bought in at a cheaper price, and that was me realizing I made a mistake when I initially sold. The share price pulled back a lot, and I was getting a little bit nervous about the pretty big volume coming in. And then I realized on that 1 hour where we saw really big volume coming in, that was capitulation. And I was a part of that capitulation. And then I immediately bought back in, thankfully at a lower price, $1.01. And then we saw the share price take off. I was thinking of maybe taking profits because the share price has increased by about 17% from when I bought back in. So this is a really good example of what's the word? There is a word behind it. When you sell out a position, a lot of investors really struggle to buy back in if they realize they make a mistake. And this is the realization that I don't have that sort of personality, that sometimes when I make a mistake, I realize I make a mistake and I correct it fairly quick. In fact, I corrected this mistake within an hour. So you do have to be a little bit active, and I'm really happy I corrected that mistake, because that was a mistake. This was just a dip. It wasn't anything wrong with the company. It was just a bit of capitulation right at the end. Those shareholders getting nervous. And if you look at the previous low we saw back in July, that was at 97 cents. And this low was a little bit higher at $1. And the share price now has taken off. I would like to see the share price get above the highs we have seen. So share price is really struggling once it gets above about $1.23, 24 cents. So if the share price gets to that level, maybe I will take profits again in anticipation the share price might drop back. But even if I do make a mistake there, I still have a medium, longer term position in this company. Bell Financial Group have released a couple of really positive reports, one positive report. Now, the whole reason the share price of this company fell a long way was because of some concerns with money laundering, and those concerns are now being wiped away. And they released a pretty good report. I think the main reason I've decided to include this company in this report is the share price is really struggling to get above $1.08. You can see the previous highs we saw back in December last year, February this year. That share price high was $1.08. We saw the share price get to $1.08 in the last month or so, and really struggling to get above that. So if I see a breakout above $1.08 on strength, on pretty good volume, that would be a breakout in my opinion. Not my opinion, it would be a breakout, and that would be a sneaky buy or adding to my position in this company. I do think this company might be undervalued. Market 334 million, dividend yield 6.7%, price earnings pretty low at 13.1%, and they had a good announcement not that long ago. It's probably why the share price rose, 11.5% on the 11th of July. It was because of that good announcement. But share price trying to get out of the downtrend, and hopefully it will. Next one is Energy One. I so wish I added to my position in this company. So this is another long-term position I will have. The market cap of this company went below $100 million for a while. It's currently $125 million. This company is profitable. It is growing. I think for some reason, market just didn't like this company for a while. So really good downtrend. And possibly that downtrend is coming to an end. Some really big volume coming through at the end of June, massive volume 2 days in a row. And that coincided with a massive increase in share price over a short period of time. Now, you might argue fair bit of liquidity in trading of this company. I don't care about that because this is a longer term hold. And I have been thinking about adding to my position. I just wish I add to my position when the share price was $2.80. But at that point in time, share price was in a downtrend. Now, it's a company I bought just because of the chart. And there's no reason to sell out of IPD Group. So I bought back in June, it was May 2022. Share price was about $1.60, $1.50, $1.60. So this is almost a three-bagger for me. Share price just keeps on growing. What is really interesting about this company is when you look at all the IPOs over the past 2.5 years, the majority of charts for IPOs over that period are absolutely atrocious. This is probably the best chart of a company that has IPO'd on the ASX over the past 2 or 3 years. And the reason behind that is financial expansion of the company. This company has kept on releasing profit upgrades. This company is profitable. They do also have a dividend, and they're also in the right sector. So have a look at some of the videos I've released on this company. No reason to take profits in this company. The other really interesting thing about IPD Group, a couple of times this company has been mentioned on the call, and what really fascinates me is when this company is mentioned and one of the experts say, "Oh, I've never heard of this company." And it just shocks me that experts have never heard of a company that has a chart like this, that is profitable, that is growing. It just amazes me because I am not a professional. I'm an amateur, and I have heard of all the companies you probably should have heard of if you are an expert. Now, understand, many of the experts will never invest in these type of companies. They always wait until the company has proven themselves. But in my opinion, you have to sometimes enter these companies when they're proving themselves. Some investors or some of the professionals want to wait 5, even 10 years before they invest in a company. And that's way too long, in my opinion. But I sort of understand what they're talking about. They want less risk, and which I do understand, less risk. But look at this beautiful chart. So all you have to do is understand charts, understand why the chart looks like this, financial expansion in the right space. Now this is a company in my medium-term portfolio, and hopefully I'll be able to transition this company to my long-term portfolio. Who knows when that's going to be, but I still probably would wait a few more years just to see if they can continue proving themselves, continue to grow in the future. Now onto 3 companies that are in my long-term portfolio. First one is Aristocrat Leisure. And the reason I decided to have this company in this particular video is, well, this is the first time I've looked at Aristocrat chart for a while, because really it wasn't doing anything, but the share price has just boomed out over the past 2 weeks. And share price is now at last time share price was this high was in the beginning of 2022. So not quite a 2-year high, but an 18-month high in the share price. Not sure why the market is getting excited about Aristocrat, but definitely the chart looks much better for this company. So this is in my long-term portfolio. No reason to even take profits yet. And Breville Group, I'm very bullish about the long-term future of Breville Group. And when I say long-term future, I'm talking about 10, 20 years. And the share price has broken out. I'm calling this a breakout for Breville. There was a bit of a resistance level at $23.50. Share price now $24.50. In fact, the share price broke out on Monday or Tuesday of this week. And typically you want to see good volume, and that's the only thing. We didn't see really high volume, but share price of Breville Group is in a beautiful uptrend. Wouldn't be surprised to see a little bit of a dip back towards this green area. And then if the share price doesn't fall any further than the green area, that will be the definition of a little bit of a dip, buy the dip situation with Breville Group. Now, you might be surprised that I have put or do have Telix Pharmaceuticals in my long-term portfolio. And the reason behind that, even though I wouldn't classify this company as a high quality company, I just am really excited about the future of this company. I think this could be a massive company on the ASX in 10 years' time if they can hit their potential. There's no reasons why they can't hit their potential. And the market thinks that as well. And that's why the market cap of this company is $3.2 billion. Now, this company didn't have any revenue a few years ago. So if you go back to 2020, $5 million of revenue, 2021, $7.6 million of revenue, and loss making to the tune of $80 million. So if you looked at those numbers, you might think, well, why would you even think about investing in this company? But then look at the 2022 revenue, up to $160 million, still $104 million of losses. But when they release their financial year 23 numbers, you're going to see that revenue maybe quadruple, triple, quadruple, and they won't be loss making anymore, more than likely, maybe small loss. And that's the reason why the market is excited about this company, just the phenomenal growth in revenue. And they have a lot in the pipeline as well. And if those solutions, products in the pipeline are what I believe they can be, the revenue of this company could be well over $1 billion in a few years. That's why I'm excited. That's why I am not even thinking about selling this. The only thing I would do is maybe add to my position of Telix Pharmaceuticals. Now, another company I took a position just because of the chart is Duratec. So I took a position in Duratec. Now, I've got to remember here. So there was a break. Why is this so slow? So I took a position in this company when there's a breakout. You can just see, if we go a little bit back in past, the share price of this company was in a downtrend. And then, so this company listed on the ASX end of 2021, you can see a massive decrease in share price. Share price then dropped, was in a downtrend, and moved into an uptrend around July, August of last year. Share price at that point was about 37.5 cents. I took a position when the share price broke out above about 40 cents, and the share price has just kept on in beautiful. This is the definition of a beautiful chart. Really interesting trading. The last few trading days, share price increased 5.7% on the Thursday, up another 3.9% on the Friday. That possibly is a bit of a sell signal. I don't like that sort of one-day candlestick, but no reason to sell out of this company or take profits just yet. The chart looks absolutely beautiful. One of the best charts on the ASX right now, in my opinion. Now, another company that I believe will be, this is in my long-term portfolio, and that is Audinate. This company has the potential to have one of the greatest moats ever on the ASX, and I do know a lot of professionals believe that as well. Professional investors believe that as well. Markup $780 million, and then you look at the revenue. Last year, $46 million of revenue, loss making. Previous year, $33 million of revenue. So not brilliant growth in revenue, but it's just that potential of significant growth in the future because this company has the moat. This company is potentially has one of the greatest moats on the ASX, as I mentioned. Now, the one reason I've decided to include Audinate on this video is just when I had a look at the chart, the share price is at a really important point right now, just above $10. So we have seen share price of Audinate really struggle to get above $10 and stay above $10. That I probably should mention that. So if we go all the way back to 2021, whenever the share price gets above $10, it sort of pulls back. So we need to see, I'd love to see the share price get to $11. That was the high back in 2021. So a nice little run the share price of Audinate. And we haven't seen much of a dip. So there was a bit of a dip in May last year. Share price did get down to almost $5. That would have been a great time to take a position in this company. But I think when we're talking about Audinate in 5-10 years, this is going to be a significantly bigger company. Now, onto SG Fleet. I almost sold SG Fleet back in the start of June. You can see the share price really doing nothing. And I was a little bit confused because Macmillan Shakespeare, Smart Group, the charts of those companies were going up at that point in time. So I took a position in SG Fleet thinking we'll see a bit of a translation of the increased interest in those two companies to SG Fleet. We didn't see it initially. I thought, oh, maybe I've made a mistake here. So I've already have a position in Smart Group, not a position in Macmillan Shakespeare. And then I was thinking, well, I may have missed the story. Not the story, but maybe I was thinking a little bit too much about SG Fleet. And then all of a sudden, the share price just took off. And share price broke out of its long-term downtrend. And yeah, so, oh yeah, the other reason I decided to include SG Fleet in this video, we did see the share price pull back. So share price pulled back up until Friday. So we saw the share price down 2.8% on the Friday or Thursday. And then on the Friday, share price zoomed up 6.1%. And the other thing is pretty low volume, but that's exactly what you want to see. Share price bounce off a support level. That support level is two things. It's the long-term downtrend, which is no longer in play, but sometimes you will see the market test any sort of broken or any sort of break in any sort of trend. And also it tested the support level, which is that shaded green area, and it bounced straight off that, which is really interesting. Really interesting. So I do have a trading position, a medium-term trading position in SG Fleet. The other thing I should mention, some of my trading positions in SG Fleet, I'm not sure about the short term, but I was confident that eventually SG Fleet share price will go higher when you compare it to Smart Group. Let's have a look at Smart Group and Macmillan Shakespeare. You'll see what I'm talking about. So these companies are all in the same. What is Smart Group? SIQ. So I bought this company, I forget when, was it May or something? So you can see Smart Group's share price move into an uptrend really towards the start of the year, and it just keeps on going higher. I do have a sell point for Smart Group, which is $8.20. So I was thinking the same thing with SG Fleet, and Macmillan Shakespeare was probably even more bullish. So I thought, well, instead of taking a position in Macmillan Shakespeare, I'll buy the third player, which is which is SG Fleet. So Macmillan Shakespeare share price has been an uptrend really since the middle of 2022. So this is probably the higher quality company in this space. I'm just guessing. Well, that's what the market thinks. Smart Group, probably the second highest quality company. SG Fleet, the third highest quality company. And I thought this momentum in the share price of Macmillan Shakespeare and Smart Group will translate eventually to SG Fleet. And my impatience just made me think about taking or selling out that position in SG Fleet. So I'm very happy I didn't go through with that thought process. Now, on to the last company I have in today's video, and that's Fineos Corporation Holdings. This is another trading position, which I've just turned into or transferred to my medium-term portfolio because I think there is potential of this company. And the share price looks beautiful, or the chart looks beautiful right now. Fairly short-term uptrend. And we did see the share price zoom higher. What date was that? That was at the 2nd of August. Share price rose 12.9%. Not sure why, but beautiful chart. Last time share price was this high was back in March of 2022. And this company is moving towards profitability. That's the main thing. That's what the market likes about this company right now. So I bought Fineos just prior to the breakout. So we saw the share price increase 11% on the 16th of June. And then sort of go sideways. We didn't see any selling after that. And that's when I took a position. So I was preempting the breakout in the share price above the resistance level at $2.20. I think I bought at $2, if I remember correctly. I can tell you right now. I can't tell you. But I would have bought in about $2 Fineos. So it's a nice little trade there. But I was probably, again, my impatience made me bought a little bit earlier than I probably should have, because I should have been waiting for a breakout in the share price above 220, but I thought it was going to break out above that level. So in a way, my impatience served me well in the case of Fineos Corporation. So that's all I have for today's video. If you have any thoughts about any company, any chart I've shown you in today's video, love to hear your thoughts. So leave those in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for today's video. Have a good day. Bye.